the significance of key hours on CME Group's Nasdaq100 futures, a deeper dive into high-frequency trading strategies. In the realm of high-frequency trading HFT, particularly within the intricate landscape of market making, the strategies for liquidity provision and liquidity taking are as multifaceted as they are crucial. One such strategy that stands out is the concept of time slicing, a technical approach that plays a pivotal role in optimizing trading operations. Time slicing entails the meticulous breakdown of a substantial trading position into smaller, more manageable fragments. These fragments are then executed in a sequence of trades spread across a defined time frame and price range. This sophisticated maneuver serves several fundamental purposes within the world of HFT. Firstly, it facilitates the smoothing of the average cost associated with a given position, thereby enhancing the precision of the position's opening cost. Secondly, it provides a cloak of discretion, preventing the overt disclosure of one's trading intentions to fellow market participants. However, within the intricate dance of high-frequency trading, there exists a fascinating nuance. There are moments when, as the culmination of an hour or half-hour nears, the algorithms responsible for executing substantial positions in slices must pivot with swiftness and intensity. These critical junctures often occur in the vicinity of key trading hours during the day. For instance, 5 minutes prior to or after the pivotal opening and closing hours of global stock markets, a surge of activity is palpable. An illustrative example of this phenomenon can be observed through a case study on the Nasdaq100 index conducted by METAquant, precisely timed just before the opening of the U.S. market. This analysis provides us with invaluable insights into how the dominance of HFT and market making intensifies during these pivotal moments in the daily trading cycle. This captivating analysis delves deep into the intricacies of HFT, exploring facets such as volume, liquidity, price action, volatility, timing, market making, liquidity taking, time slicing, iceberg orders, volume price impact, and even the enigmatic world of quote-stuffing activity. It's as if the pages of financial textbooks have come to life, offering an unparalleled glimpse into the real-world dynamics of the market. This treasure trove of insights is not based on mere conjecture but is derived from concrete data sources, including CQG data from CME, real-time tick-by-tick data, and Level 2 market depth data. In essence, the significance of key hours in CME Group's Nasdaq100 futures transcends mere timekeeping. It represents a confluence of strategies, technologies, and market forces that shape the landscape of modern trading. By understanding the intricacies of time slicing and the heightened activity during these pivotal moments, traders and investors can navigate the dynamic world of HFT with greater precision and insight.